بسم الله الرحمن الرحيم. باسمكم جميعا وباسم الغرفة التجارية ممثلة بلجنة الاستثمار والاوراق المالية وبالتعاون مع جمعية المحاسبين الإداريين أن ترحب بكم على مشاركتكم وحضور المحاضرة تطوير هيكل الاعمال في ظل تطبيق ضريبة القيمة المضافة التي سيقدمها لنا السيد شادي أبو شقرة مدير تنفيذي ببرايس ووتر هاوس. ونكرر الشكر لكم مرة أخرى على هذا الحضور المتميز.
السلام عليكم. Good evening everyone. I'm حميد الرشيد and I'm serving IMA Riyadh chapter as the director of continuing professional education. First of all, I would like to thank you for joining this free CPE event, which has been organized by the IMA Riyadh chapter in cooperation with the Securities and Investment Committee of Riyadh Chamber of Commerce. I would like also to take this opportunity to express my sincere thanks to Riyadh Chamber of Commerce management for awarding this opportunity to host this event. I'm glad to introduce Mr. Hassan Al-Bahas, who has been dedicated to the profession and serving as the Riyadh chapter president since the past 2 years. He would like to say to have a word.
السلام عليكم مرة ثانية. اللهم صل على سيدنا محمد وعلى آله وصحبه وسلم أجمعين. It's always a pleasure. I just already mentioned a while ago, and to be just shorten time and not to take it so long. We are here all just to learn and educate each other. So I'm not going to take any time except to thank you for coming again, to thank PwC and especially for Shadi Abu Shaqra, who has spent quality time to prepare this material, which inshallah will be efficient and helpful to all of you guys. VAT is a hot subject, and we have done few sessions in the past, and we'll continue investing in this subject until we become somewhat more competent and helping each other. So please, if you have questions or if you like to network more, we will stay after the session. We'll have many questions on your side, so please keep them, or in case especially people who sit in the back, maintain to keep the questions written. So at the end of the session, we'll have like 15 to 20 minutes for those questions. In case in the middle of the session, because we do want to have it only one presentation session, we need to have it like kind of engaging. In case if you feel like you need to interrupt at any time, raise your hand, we'll bring the mic to you. You introduce yourself and you start asking the question. No, we don't have time for comments or for sharing knowledge. We can have that afterward. So let's agree, like a kind of a ground rule. Do not share your experience or your knowledge. Don't ask a question specific to your area, please, because we need to help each other to learn. If you have a specific question, we have enough time after the session and even afterward through either IMA portal or through the instructor through PwC or direct to me. We are all glad to help you. I'll leave it for Muhammad again to introduce our guest today, and we'll take it from there. I wish you all the best, everyone.
Finally, I would like to conclude with presenting our key speaker here, Mr. Shadi Abu Shaqra from PricewaterhouseCoopers, who will be taking us through our topic today, business model under value-added tax. Before I hand the mic to Mr. Shadi, I would like to brief you on his profile, shedding the light on his professional experience, areas of expertise, and past projects he worked on. He is the tax director at PwC, holding the US CPA designation and CGA from Canada. Throughout his professional experience, he has been dedicated to consulting services for corporate businesses in diverse disciplines, including tax advisory. He brings with him over 15 years of expertise in the tax accounting, and public policies. He is leading the VAT implementation initiative for Pricewaterhouse across KSA clients, as he worked previously for many years in VAT implementation in Lebanon. He also worked in Pricewaterhouse Egypt to help the business transition to VAT, as he collaborated closely with PwC team in Egypt, third-party compliance services providers, and governance representatives. He worked for many years in tax consulting, compliance, and has a thorough understanding of the VAT requirements, advising multinational firms as well as private companies in corporate tax, VAT, and customs. He actively participated in designing and implementing a new tax system across GCC countries through managing a project and revenue instruments, analyze the tax regime and administration, draft laws as legislation, as well as conducting an impact study analysis across GCC for refining and improving the overall tax system and enhancing the performance in the tax administration. Please join me in welcoming Mr. Shadi Abu Shaqra.
Thank you, Muhammad. Thank you. Okay. Thank you, everyone, for attending the session today. I know VAT is quite a big topic, and 2 hours might not be enough for us to be able to cover all the aspects. And I know that you might have a lot of questions that now VAT is going to be implemented very shortly. So the objective of today's presentation is to cover the VAT impact and what does it mean to you and what do you need to be doing in order to prepare yourself for VAT. So I split the presentation into 4 main sections. First, I wanted to give you a background on VAT and explain a little bit about the latest developments so we are all on the same page and understand what are the latest legal requirements for VAT. Then we're going to explain the key features of VAT, so to get certain that all of you know at least the basic VAT and how it would apply to your organization. The third point, I'm going to focus on the compliance requirement because this is one of the most important aspects of VAT that you will have to deal with in the coming future. So I will talk a little bit about the main compliance requirements, and then I will take you through the implementation process and what do you need to do to implement VAT successfully in your respective organization. I've had a discussion with Muhammad earlier, and I know that you come from different type of industries, so you represent your companies today, and we know that VAT could apply differently to each type of sectors or activity. So I'm happy to take your questions afterwards. And since there's a large crowd, I hope I can respond to all your questions today. We have a very little time to be able to do so, but I'll try my best. Just in terms of latest development. So mainly VAT is a value-added tax. It's called also in other countries goods and services tax. And it applies to the transaction itself. So whenever you have a supply of services or a supply of goods, tax or VAT would apply. Typically, in Saudi, you are used to customs, like most companies who trade in goods actually pay customs at the border. VAT is a new tax which comes on top of customs. So it is an additional tax which has a similar rate for most customs tariffs, which is a 5% rate, but it would apply not only on goods, it would apply also on services. So if you're providing services, you will also be subject to VAT. Now, the GCC member states have altogether agreed to launch VAT in the region. So KSA will not be the only country that will apply VAT, but it will be one of the first countries that would apply VAT. So KSA has issued by royal decree the GCC VAT Framework Agreement, which is a general directive that would apply to all GCC member states the same way. And this agreement has been ratified and issued in Saudi by royal decree. So now it is a law in force. A similar legal framework exists under the Common Custom Law, which is also a GCC law that applies also to all GCC member states the same way. However, in the GCC Framework Agreement, the GCC member states have decided that some features of the VAT will be included in the local legislation. For example, the Saudi VAT law, which has only been released not on 28th of July, so not too far back, but the VAT law has been ratified as well and released in Saudi. And in addition to that, KSA government has also released the VAT regulation, which became final on August 28, 2017. So by that date, the legal framework that exists now stipulates that VAT will start to become in effect by 1/1/2018. So we are now end of October, so we still have 2 months to get ourselves ready for VAT. And Gazette is committed. Gazette is the general authority for zakat and tax. The Gazette, which represents the tax administration, is committed actually to run or implement VAT by that date. We know that probably some businesses feel that they are not ready, but you still have 2 months to get yourself prepared. It's a very important transformation in the economy of Saudi, and therefore you need to get ready, because if you don't get ready, there could be penalties that would apply to you. And I will explain that in a little bit more when we go through the rest of the presentation. Just to give you an idea, VAT is not a new tax. It has been implemented in more than 160 countries. So Saudi is one of the late implementers. If we talk about VAT worldwide, most countries have already some sort of a VAT system or a GST system or a sales tax system, which is an indirect tax that would apply to all businesses in Saudi. I will explain in a bit how the VAT works so you get an understanding of it, but I just wanted to run a few numbers for you to get an understanding of that. Usually the standard rate that will be applied in Saudi is 5%, which is a very low rate if you compare it with other jurisdictions where the rate could reach 20%. For example, the VAT rate in the UK could reach 20%. However, in Saudi, it's only 5%, and it will apply the same way in other jurisdictions. As for now, we know that the UAE will also implement VAT by 1/1/2018. So 2 GCC member states will go live on 1/1/2018, and all other GCC member states, which are also committed to implement VAT, might delay the implementation throughout 2018, but also they are committed to implement it sometime by 1/1/2019. So therefore, if you are operating across the GCC as well, you have to consider that VAT will still apply in other GCC member states, and to prepare yourself as well for that. So typically, if we compare the revenues that the VAT would generate with the GDP, we would realize that at 5%, the VAT would raise around 1.38% of the GDP. Knowing that Saudi economy is huge because we have the oil, which enters into the GDP calculation, therefore that percentage might seem low, but it's a big number compared to the Saudi GDP. Now, in other countries, if we look at New Zealand, if we look at New Zealand, for example, we see that the percentage of VAT revenues from the GDP could reach around 9.9%. So on average, in all OECD countries, the average is 6.6%, which is a lot higher because the rates are a lot higher. In Saudi, the rate will be only 5%. But it is expected that VAT will be the second revenue for Saudi after oil. So you might understand how important it is for the government to implement VAT because of the importance of the fiscal sustainability objectives and Vision 2030 objectives, which all go in the same direction and lead to the same objectives. Just another benchmark on the VAT system compared to other countries, just to give you some flavor on how VAT will apply. Mainly, if we look at the EU system, on which the Saudi system is more or less based, it's not the same system, but it's the same principles that would apply. The EU system is one of the most complex VAT systems in the world because you have multiple rates, you have a lot of exemptions, you have complex obligations that are required from taxpayers, you have burdensome fines as well. On the other hand, when we move to countries which have implemented VAT recently, like Singapore, Australia, New Zealand, we find that these countries have adopted a broad-based tax system, single rate that apply to most products, so you don't have to think about what rate would apply to which product because they are all the same. So therefore, it's an easier system and less complex system. So the system that is conceived for Saudi is a very simple system compared to systems that are or that exist around the globe. Okay? So what is the system that we are talking about? What is the VAT GCC system? Mainly, there are few things that I'm going to say now, and I want you to memorize that for the rest of the presentation, because I'm going to talk about technical terms. I know most of you might not be familiar with, but try to keep up, and if you have questions, I'm happy to respond. But what we need to just to cover, I'm going to use these technical terms more often during the presentation, so I want us to be on the same page. So first, when we talk about goods and services, it's all type of goods and services. So VAT, in principle, would apply to all goods and services unless it's specifically exempt, the good or the service is specifically exempt, or it's zero rated. And I'm going to explain what is an exemption and what is zero rating later on. But remember that we have something that we call exemption, something that we call zero rate that we will address. VAT will also apply on import. So if I'm importing goods from Europe, let's say, and selling them in Saudi, what will happen is the following. Today, I pay 5% customs. Tomorrow, I will be paying 5% customs plus 5% VAT. So for example, if I'm buying a product which is 100 riyal, I will pay on it customs 5%, it will become 105, and the 5% VAT will apply on the 105. Okay? So upon import, I will have to pay VAT. So we said that VAT applies on goods and services. So what do I do with services? I cannot collect VAT at customs for services because there is no custom border for services. So for services, there is a totally different treatment that is called reverse charge. I want you to memorize this term, which is reverse charge, and I will explain it later on. I have a practical example where I will explain it in more detail. But let's remember it for now. The standard rate is 5%, so it's one rate across the board. Exports, when you enter into an export arrangement, you are selling goods to someone in Europe. The export is zero rated, so you don't apply VAT on export. And why is that? Can anyone tell me? Exactly. So goods and services will not be consumed, or goods will not be consumed in the country. They will be consumed in a different country. So since they are not consumed in Saudi, and VAT is a tax on consumption, therefore I don't have to pay VAT on it in Saudi. Therefore, those goods, when they are shipped outside or exported, will be subject to 0% in Saudi, and they might be subject to VAT in the country of destination. So if they go into Europe, they will pay the European VAT. Okay? For services, the same thing applies, but it's more complex for services. Typically, in principle, services that are exported should be zero rated. But for example, if a service relates to a real estate situated in Saudi, the service will not be zero rated. So there are exceptions of this general rule, which you need to be aware of, each in their respective industry. There are specific rules in KSA VAT regulation that would determine how you calculate VAT on the services. Okay? Another area, there are possible VAT exemptions, and in Saudi, the system has been that we will apply VAT on a very broad base of goods and services. So exemptions are very minimal in Saudi. They only relate to few goods and services or few sectors, and I'm going to talk about exemption later on. But exemption is something that I want you to remember. Minimum annual turnover is also something very important. The minimum annual turnover is the threshold upon which you might register for VAT or you might not be eligible for registration. So what do I mean? If you are a registered person for VAT, means that you need to be fully compliant with all VAT requirements. But to be a registered person or to be a taxpayer, you need first to meet a threshold requirement, which is 375,000 Saudi riyal. which is a low threshold. So if you have a turnover of about $100,000 or 375,000 riyal, you must register for VAT. It's a must. There is also a voluntary threshold upon which you may choose to register for VAT. And this is we call voluntary threshold. It is half of that amount. So it's 187,500 Saudi riyal. If you meet that threshold, you can choose to register or not. Okay? So these are the minimum threshold requirement is very important because it will determine whether you should register or not. And once you register, you have to comply with all VAT requirements. And I will talk about those requirements when I reach the compliance section. Deduction of input VAT. I want you to remember this term as well. Input VAT and output VAT. Okay? Whenever I make a payment to a supplier, or I buy from my supplier, I make a purchase, I register an expense, this payment would be subject to VAT, most probably, and therefore I would have an input VAT that I would have to charge, okay? Input VAT, it's on my inputs. Output VAT, it's on my output. When I sell you something, I will have to charge VAT. It's called output VAT. So input VAT is everything I pay to my suppliers. Output VAT is everything I charge my customer. From VAT law perspective, you are allowed to claim the VAT that you pay on your inputs in certain situations. Okay? The input VAT, I will have a detailed example that will explain to you how we deduct the input VAT, but typically anything that I pay for VAT purposes, I can claim it back. There are certain exceptions. I will talk about those as well. Periodical filing and reporting. This is one of your major compliance requirements. You need to actually file a tax return. You're all familiar with the zakat or income tax. You're currently paying, you declare a zakat return once per year. Or if you have like foreign ownership, you might be also declaring income tax return once per year. There's also the withholding tax return, which you just report on a monthly basis. Now for VAT, the reporting and the filing is also on monthly basis or every 3 months, depending on your turnover. If your turnover is above 40 million Saudi riyal per year, then you file every month. If it's below, you file every 3 months. Okay? But this is a requirement that you need to meet in order for you to get to comply with the requirements. Now, it's not all bad news. I talked about registration and requirements, threshold requirement. There is also good news that there is a relief provision in the Act that if you meet the threshold requirements, so you are 375,000 Saudi riyal, you have 375,000 Saudi riyal in turnover, but below $1 million riyal, you can postpone your registration till 20 December 2018. So you can start applying VAT by 1/1/2019, but only if you meet that condition. So your turnover is between 375 and $1 million. Okay? So that is a relief that is provided under the VAT rule. So with that, I'm going to move to explain the key VAT features. I mentioned a few technical terms. I'm just going to repeat them again, so I'm sure that everyone is on the same board. We mentioned reverse charge. We mentioned input tax. We mentioned output tax. We mentioned zero rates. We mentioned exemptions. So 5 terms that I'm going to use throughout my presentation, which I like you to remember. First, I'm going to, since we are explaining the VAT feature, I'm just going to explain first what is VAT. What is VAT? So VAT is a tax on consumption. We just gave an example of export because exports are not consumed in Saudi, so they will not be subject to VAT in Saudi because VAT is a tax on consumption. But it is your burden or your compliance requirement are to file VAT, to collect it from your customers, and to pay it for the government. So companies in general, in a VAT system, operate like agents for the tax administration. VAT is not a cost to you. VAT is not a cost to you unless you are exempt or there are certain areas where it could become a cost, so not to generalize, but in principle it's not a cost. All what you need to do is to collect it from your customer. So you're collecting it from your customer. You are not charging it yourself. Like you're not, it doesn't go into your expenses. It goes into an account payable account, because whatever you collect from your customer would have to be paid to the government. And then you pay it to your supplier. So therefore, and we said input tax, you can deduct it. So all what you need to do is to collect that VAT from your customers, deduct the amounts that you pay to your supplier, and pay the amount to Gazette. So to illustrate that further, I'm just going to go to this example, then go back, since we're talking about how VAT works. So let's take an example and make sure that we all understand it. So we said that businesses will charge VAT to their customers. Okay, so let's take an example where you charge 2,000 Saudi Riyal to your customer. What is the VAT amount on that? 5%. 5% multiplied by 2,000, it is 100 Saudi Riyal, which is a VAT collected. Is that a cost to you? No, it's a balance sheet transaction. It goes into your accounts payable because you need to pay that amount to the government. Then you purchase items from your supplier. Let's suppose you purchased an item for 1,000 Riyal. You pay 5 in VAT, 5%, so your VAT liability is 50. So your input VAT is 50. Your output VAT is 100. So 100 minus 50 would net to 50. So you have a payable amount that you have to pay to Gazette of 50 Riyal. You only pay the 50. Whereas in the second part, if we go to your right side, I'm reversing the example just to show that if I sell for 1,000 and I bought something for 2,000, I might end up in a negative balance, which is minus 50. I have the right to claim it as a refund. So Gazette will refund that amount to me, or it will credit it to the next VAT period. So I get a credit with Gazette, which I can roll forward from one period to another. So this is the basic principle of VAT. This is how it will work. And it's not on a transaction by transaction basis. Like when you report to Gazette, we said that the filing happen every month or every 3 months, depending on your turnover. So you aggregate all your input VAT, you aggregate all your output VAT, you make the difference, and you report. You reported once to the Gazette in your monthly tax return or your 3-month tax return. Is this clear? Okay. So I'm just going to go back one step to explain also some situations where you might actually, where VAT could become a cost to you. Because in the example we gave, we said VAT is not a cost. But sometimes it could be a cost, and I'm going to explain why. So let's explore what are the rates that would apply to VAT. We said that there is a standard rate of 5%, which will apply mainly to all sorts of supplies of goods and services. Okay? By default, 5% is the rate that would apply to all supplies. Now, there are some supplies which are zero-rated supplies. And this is indicated in the regulation. So those supplies are medicine and medical equipment. So if you have a pharmacy, you're selling medicine, you will not charge VAT on the medicine. If you are selling medical equipments, you will not charge VAT on the medical equipment because they are zero-rated. Okay? International transportation services also, if you are operating in airlines, for example, you have international transport. If you're flying from Riyadh to France, that's an international flight. You don't pay VAT on that ticket because that's zero-rated for VAT purposes. But if you're flying from Riyadh to Jeddah, you will pay 5% ticket because domestic transportation are subject to VAT. This might not impact you. I don't think we have, I don't know if we have any airline operator here, but how will this impact your business? Because you have to think also on the input side, So if I have business expenses which relate to the international transport, those have to be zero rated. Okay, so I need to know that. So I codify it the right way in my system. Then we have export. We said that exports are zero rated, so that would apply. We have services provided to non-GCC residents as well. And supplies of investment metal are zero rated. So for example, if you are buying gold or silver, but what we mean here is not like if you're buying a ring or a watch, only if you're buying bullion gold, which is mainly over 99%. So there is rule, which is investment gold. So you buy it for investment purpose. That would be zero rated. Now, in addition to the zero rating, we have the exempt supplies, which also not many. The exempt supply are identified in the regulation in Saudi as follows. We have the lease or license of residential real estate. So if you are a company that actually rent out residential units, that supply will not be subject to VAT. It is exempt. Okay? If you are a life insurer, insurance company, the life insurance is exempt from VAT, but all other type of insurance are subject to VAT. So a car insurance is VATable. A health insurance is VATable. Core financial services. Core financial services are the banking services mostly. Those financial services are partially exempt. They are not fully exempt. Part of the financial services, which is core, which is mainly the spread or the margin that the banks will take on the loan that they give, or on the Islamic financial product that they provide, those will be exempt. But if the bank charges you a fee, for example, if you open a bank account, they would charge a fee for that, that would be considered a consideration for a service, and therefore it will be subject to VAT. However, all other banking services which are spread or margin-based will not be subject to VAT and will be exempt from VAT. But what is the implication of being taxable, zero-rated, or exempt? Anyone knows?
Basically, when you are zero-rated, you are still able to pay people VAT, but if you are exempted,
Totally correct. So we said in a bit, I told you that I'm going to tell you where VAT becomes a cost. Some people tend to think that if I'm exempt, that's good for me. It might not be very good, because if I'm providing an exempt supply, I cannot claim the input tax credit that relates to that supply. I'm going to repeat. If I'm providing an exempt supply, I cannot claim the input tax credit that I would pay to my purchases, on my purchases to provide that supply. So therefore, all input tax becomes non-recoverable, and therefore it becomes a cost for the business. And the technical term is hidden cost. For example, financial services in Europe are totally exempt. But if you Google financial services in Europe hidden cost for VAT, you will find plenty of articles that talk about the hidden cost with that comes with that exemption. It's true that I will not be charged VAT to my customer, but I will have a cost on all my purchases. Therefore, I might be obliged to raise my prices when I sell to my customers. So therefore, exemption is not always the best way forward. Okay? Any questions so far? Okay. Now I'm going to explain how VAT would work across the supply chain. So you understand how it affects your customers, how it will affect your suppliers, and how it will impact you. So mainly, let's go through an example. Step one, I have a manufacturing company that produces goods. So the sale price of that goods is 100. Let's assume those are taxable goods. The manufacturer will actually charge 5%, which is 5 Saudi Riyal on that 100. Let's assume for the sake of the example that we don't have any input tax credit. So typically the the supplier of, sorry, this is for raw materials. So the supplier of raw material who sells to the manufacturer will only pay 5 in terms of VAT. The manufacturer will mainly buy for 100 and will sell it for 200 because he needs to include the margin. I need to make profits. I'm in the business to make profit. So on the 200, he will charge 10 VAT, but he can deduct the input tax credit he paid to the supplier of raw material. So his net position is 10 minus 5, which becomes 5. Step 3, so he's selling to a wholesaler. The wholesaler will buy it for 200, but he will sell it for 300 because also he wants to make profit. So therefore, his VAT will be 15. But he can deduct whatever he paid for his manufacturer, so which is the 10. So his liability is 5. The retailer will finally sell it to the final consumer for 400 because also he wants to make a profit. So he charges the customer 20, 5% times 400, and he can deduct the 15 he paid to the wholesaler. The total paid by him is 5. So if we add the 5, 5, 5, and 5, we find that the final consumer actually paid 20, which is the VAT on the final price. So this is why VAT is not a cost for business. It's mainly assumed or assumed by the final consumer, which are you. You will be buying stuff from the supermarket. You will be making purchases. You will be paying ultimately the VAT that goes across the supply chain, and every entity is actually supposed to declare it to the government and collect it as an agent for the government. Clear?
Unpaid agents. Unpaid agents.
Unpaid agent. Sorry? No, it's not a total of 20%, if a total of 20 Saudi riyal.
When the manufacturing, you're making this one, he will purchase the material. So he has to pay the 5%. Then another after he's produced the goods, after he's telling he will add a 5% is more. Then it will be the working out at the end of the customer, he will go up indirectly, he will pay the 20%.
Okay. So the question we're receiving, I'm receiving now is that the final customer will pay 20% because he's charged 5% at every step. Is that your question? That's not accurate because we have the input tax credit deduction. So every supplier will be able to claim back the input tax credit. So it's true that they charge 5%, but they can deduct. So at the end, the final consumer will only pay 20 Saudi riyal. He will not pay 20%. 20 Saudi riyal is 5% of the final price. So VAT is not cumulative. It's not like if I pay 5% at every step, I accumulate 20% at the end. At the end, the final price multiplied by 5% should be the VAT that would be paid. But it's on the final price. Clear?
For example, 100 rupiah, I was the manufacturer is purchasing 100 riyal. So he has to pay 105. That means 5%, right? So after that, the second step is he's transferred to goods or any other person. So that guy is purchasing, that guy also charge 5% of your own 105, right?
No, because he can deduct the 5 that he paid.
Oh, okay. He will deduct from the 5.
Exactly. So if you follow that example, it will give you clarity more on how it works, because the objective of this example is to demonstrate that VAT is not cumulative, it's not a cost to the business, it's a cost to the final customer.
But if the retailer is not registered to the
Then you have a break in the supply chain, which creates a cascading effect. Okay? When this supply chain is broken, things would change. Okay? Because once it breaks, that person cannot recover input tax credit. If you are not registered for VAT, you don't pay VAT, but you don't get the benefit. You cannot claim back the VAT that you pay. You pay and you have to increase your price, but you don't charge VAT. Okay? So if I'm in the middle here and I'm not, sorry. So, maybe, but the threshold, I agree with you, but the threshold is very low, 375,000 riyal, and there is a voluntary threshold of 187,500 riyal. Soon enough, the retailer will realize that if I don't enter into VAT and start charging VAT, my cost will increase and I will not be able to recover that VAT. So it's better for me to include. This is why VAT is very popular around the globe and it's applied everywhere, because it's easier to maintain. Like you can actually control the VAT because it's actually left to the business to control it themselves. Because if you don't register, you cannot claim back any VAT. You will lose all the VAT that you pay. So it's to your benefit to register, so you reduce your cost or your business operation cost. Okay, I don't know if the people in the back can see the example, but I will try to illustrate it as much as possible. So here I have another example, which also I wanted to explain what is the difference between exempt, zero-rated, and taxable supplies, so you can understand better how this works. So let's assume I have a taxable supply of $1 million or $1 million riyal, and that I have costs which are the following. I have local purchases of 50 million. I have salaries of 20 millions, and I have services which I receive from abroad, outside KSA, for 10 millions. Okay? Taking that into consideration, I'm going to just have some assumptions that I'm going to use to explain the example. So I'm going to assume that 70% of export sale are subject to 0%. So 70% of the 100 million are exports. 30% are sales, domestic sales, that are subject to 5%. So that's the total 100% of my sale. And that all purchases and imports are subject to 5%. So all my purchases here, I pay 5%. So nothing is zero rated. And then that I have entitlement to claim 100% of my input tax credit. So I can claim everything that I pay. So I'm going to repeat the assumption again, just because I know there are people that cannot see the screen. So mainly, I have 100 million in sales that are 70% export, 30% domestic, and I have 50 million in local purchases, 20 million in salaries, and 10 million in services received from abroad, and that I will pay 5% on everything that I actually pay. So what would be my VAT return? How would it look like? Assuming that scenario, what would my VAT return look like? So if I take 100 million, I know that the VAT is the VAT that which is due on sale. It's on the 30% that I sell domestically, which is 30% times 10 million. Times 100 million. It's 30 million. 5% of 30 million will be 1,500,000. This is the VAT that I should be collecting from my customers because they are all domestic sales. If I have exports, exports are what? Zero rated, so there is nothing due on zero rated. You remember the term reverse charge, right? Okay, so I'm going to talk about it in a second. Then I will have to calculate the VAT which is on my purchases. So I look at my purchases, I see I have local purchases of 50 million multiplied by 5%, 2,500,000. That would be my VAT that I've paid, an input VAT, right? Then I have 20 million in salaries. Do I pay VAT on salaries? No, so nothing. And then I have 10 million of services received from abroad. Do you remember? I told you that when I import goods, I pay customs and I pay VAT. So what happened when I import services? Why? So why should I pay 5% on those services? We use? Okay, so those are services that are consumed in Saudi. Typically, if I want to be neutral, if those services have been provided by a supplier which is resident in Saudi, that supplier will charge me VAT, right? If you're getting advisory services from PwC, let's say, okay? When I provide you with these advisory services, it's a taxable event, I will charge you VAT. If you go to PwC UK and you get the same services, is it normal that you don't charge VAT? No. Exactly. So the VAT should be neutral. It's called the neutrality principle of VAT. So VAT should be neutral. You treat the non-resident similar to the resident. But there's a little problem with non-resident, is that how Gazette will go after every single non-resident and collect the VAT. Practically, is it possible? So what would they do? They will put the burden on you. You will have to report that in your tax return. You do the same thing now with withholding tax. Why do you deduct withholding tax? Because the non-resident is not paying the taxes in Saudi, so you deduct a withholding tax for the taxes that will be paid or should be paid by that non-resident. It's not your liability, it's the non-resident liability, right? So same thing applies in VAT, but in VAT, it has a special mechanism that would apply, which is called reverse charge. Typically, how that would work is you will act as if you are the non-resident, and you will have to charge VAT on the services that are received from the non-resident, as if the non-resident charged those to you. Okay? So you charge 500,000, which are 5% of the 10 million. Okay? But also, because you are a taxpayer resident in Saudi, you are allowed to claim the credit, the input tax that you should pay to that non-resident. So then you will claim the 500 again. So it's zero cash impact, but it has to be reported this way. Okay? And sometimes, if you don't have 100% input VAT recoverability, you cannot claim the full 500. So sometimes you will have to pay more. But typically, once you do that, from VAT perspective or from Gazette perspective, it will be revenue neutral. Because had you received this service from a resident supplier, you will also deduct the VAT. He will charge you the VAT, you will deduct it, so it's a zero effect. So this is reflected here as you declare it. So typically, this means that you have to report a total output VAT or total due of 2 million, and you have to report total deductible of 3 million. So when you report your return, you will say, I have 2 million minus 3 million, then the net is negative 1 million. So what can you do with this negative 1 million? Yeah, two solutions. Either you claim it as a refund, or you roll it forward for the next period. So if you owe 1 million in the next period, you will not pay anything because you already paid it. Clear?
This is something that we will need to inform the tax authorities about it when you have a refund position.
It will be in your return. Like when
So you will have to inform the tax authorities that I want to keep this residing for the next.
Yes, my understanding from Gazette is that there will be a tick box on your return because the filing will be online. You can either claim a refund or roll it forward for the next tax period. Okay? No, you will not receive a credit note. It's just going to be in your account. It's just going to be in your account as a credit. Okay? So usually whenever you file a return, you would receive a notice of assessment of that return. That notice of assessment will give you, like, it's a statement of your position. Okay? So that notice of assessment will be generated to you, and you will have record that they owe you 1 million. Okay? Same example, but this time it's an exempt business. Okay? Same example. Just to repeat, we have the same numbers. I have 100 million in supplies, 50 million in local purchase, 20 million in salaries, 10 million in service from abroad. But here, all my sales are exempt. Okay? So what would happen? If my sales are exempt, would I charge VAT? No. So VAT due on sales would be 0. Would I be able to deduct any VAT? You are exempt business, you don't deduct anything. So here, you remember the reverse charge? 500,000. So I put it as an input, an output VAT, but I cannot claim it as an input VAT because I'm exempt. So you lose it. Now you have a VAT liability of 500. And you have non-deductible VAT of 3 million. So I'm just trying to illustrate that if you are exempt, sometimes it will not be to your advantage. Okay? More complex situation. What if part of my supply is exempt and part of my supply is taxable? What will happen in this situation? So same example, same figures, but this time 50% of my supplies are at 5%, so they are taxable. 30% are subject to 0 VAT. We talked about 0 rated, so I have mixed business. And I have 20% of exempt sales. All the rest remains the same. But here, whenever I have a mixed business, so I'm providing taxable and exempt supplies, I cannot claim 100% of my input. Okay? In the tax regulation, the VAT regulation, they made reference to the apportionment method. Apportionment method is a method that you can use to make a proportion between your taxable supplies and exempt supplies that would allow you to calculate what is the value of the input tax credit that I can use. Gazette also said in the regulation, or the regulation also said, that you can use other methods. You can use other methods which are more reasonable or provide more reasonable allocation of your input VAT. But those methods have to be approved by Gazette before you can use them. So for now, the default method is the apportionment method, which is mainly very simple. It is just a formula that you would apply, where you calculate what is the portion of taxable supplies and exempt supplies from the total supplies that I have. In this case, since we have 20% exempt and 50% taxable, 30% zero rated, then my taxable supplies are 80%, right? Because zero rated supplies are taxable supplies which are taxed at 0%. They are not exempt, they are taxable, okay? So then the rate is 80%. That 80% is the proportion or the apportionment that I can use to claim my input tax credit. So we go to the calculation. In the calculation, I have to calculate the VAT due on sales. So here I take 100 million multiplied by 50 multiplied by 5%. I get 2,500,000. The VAT deductible on purchases, I have 50 million in purchases multiplied by 5%. This will give me 2,500,000, but I can only claim 80%. So times 80%, I get to 2 million. Then I would apply the reverse charge as well. So I have services received from abroad, 5%, 500,000. I have to report it as an input and an output. So output is 500. An input is only 8%, 80%, because I cannot claim the full amount. So 400,000. So here, if I'm a mixed business, my total VAT liability will be 3 million. 2,400,000 is my input VAT. So 3 million minus 2,400,000, I ended up paying 600. We use the same numbers across all the examples, but you see the difference. So if we go back, if you are a fully taxable business, you get a refund. Same numbers. If you are an exempt business, you make a payment. If you are a mixed business, you make a payment. So being taxable is not a cost to the business. Okay? As long as you don't have exempt supplies, you should be fine. But also you should be careful that you are applying VAT as it should be applied. Because any non-compliance or any divergence from the requirement could end up being a cost to you. For example, if I have to charge you VAT, I'm selling you this item, I have to charge VAT and I don't charge VAT. Who will bear the cost? You. If I paid my supplier VAT, but I don't have the right documentation to claim the VAT back, who will bear the cost? You. So in these areas, like once you start not being compliant with the requirements of VAT, VAT could become a cost. But typically, it should not be a cost in principle. Okay? So now I'm going to move to the compliance requirements. Do we have a break or we can continue? I don't know if we continue. Okay. Okay. I'm happy to take a few questions now, but if we can pass the mic just to take a few questions. Maybe I'll take 5 questions before I start with this. Okay? Thank you, Muhammad. Thanks.
Excuse me, for the reverse charge again, what is the benefit for that for the government then, if no one will pay it? In the first case, I mean.
Okay. It's a very good question because it appears when we do the math that the reverse charge has no revenue impact. But you remember the example where we explained the supply chain? So basically, the VAT will be paid by the final consumer. And you are only part of the supply chain. So if you look at it very narrowly, like if we look at it at a narrow angle and we only see like my company and what I'm doing, you're right. But if you look at it broadly and you see that I'm only part of a big supply chain, ultimately the final customer will pay that amount.
Through the cost, increase the cost.
Because yeah, it will like you charge it in your return, then it will just flow across the supply chain. Okay, and the reason behind that is mainly just to achieve neutrality in the system. So you cannot have a non-resident not paying VAT where a domestic is paying VAT. Otherwise, if that's the case, everyone will go open a company abroad and will start charging services from abroad. Like PwC will not be here. It will be sitting somewhere else and providing services, and we don't charge VAT, which is not the case. Okay? I'll take 5 questions, so please feel free.
Going again back to the reverse charge concept that the gentleman was talking about. There was something mentioned on the implementation regulation that the Gazette are willing to give a relief for the importers, the goods importer of reversing or basically using the reverse charge method in order to pay to adjust the input tax against the output, yeah. Right? So we know it is there.
Let me explain what that is.
All right.
Let me explain what that is. No problem. That's a very important question. This is also a relief that is provided under the regulation. We said that if I'm importing goods from abroad, I will have to pay at custom plus VAT. I could be like a huge manufacturer. I pay millions and millions in terms of VAT at import, and I will declare next month a return, and I will claim all this back. I will tell the Gazette, give me this amount back, because I paid this much at import, and I want to claim it back with only 1 month gap. So to reduce that burden from Gazette perspective and for taxpayers, and mainly taxpayers who have a lot of imports will benefit from that, is mainly instead of paying at customs, I will allow you to defer the payment at customs until you file your tax return. And you can report that as a reverse charge on your return. So you are claiming it and charging it in the same time. It will be the same effect, but instead of paying at customs, you will just declare it in your tax return.
I don't argue the concept. But my question here, is there any clear illustration from the Gazette about the approval of this? Of course, we cannot go and apply this immediately. You know, you need. There was a couple of terms and conditions.
There are conditions
to prove the solvency of the taxpayer. And what are they going to use? Or we have to wait for 1 year in order to prove that we are paying
correct
on time and filing on time?
I think the confusion in the regulation is around one part of that section, which talks about the conditions for eligibility. One of the conditions is that you have to have filed your tax returns for the 12-month period. Exactly.
Refers to VAT or refers to the normal tax return?
No, it should refer to VAT because the normal tax return is yearly. It's not 12 months. So the question here, how can I file a tax return since VAT will start in 1/1/2018? So this section could apply later on, but how can we start applying this at 1/1/2018? I'm sure that the Gazette will issue something relating, like some guidance around that to illustrate on the regulation, because it's not possible to apply that particular part of the regulation on 1/1/2018, provided that the taxpayer actually fulfill all the other conditions. Like you have to have financial stability, you need to submit an approval request, you need to actually be importing substantial values where you actually can benefit from that. So if all these conditions are met, since it's Gazette decision, it's linked to their approval, I think they opened the process, actually, like you can apply for
we
it.
can go and ask for a ruling now.
It's not a ruling. You don't need a ruling. You can just apply. I think you can apply now. So if you apply, you cannot meet that condition, but they could accept as well because they are the regulators.
They will go and have a look at the records.
But there is no returns that have been filed, right? So they will not look at the request. Why? They will.
Maybe they will have a look at your imports for the past 12 months. If they see that they are substantial, they might take this into consideration. Or
yeah, no, I think they might.
We can use this as a proof. For example.
No, you cannot use it as approved before you get an approval because it's required that you get an approval.
No, I mean during the filing for getting the approval.
No, but during the filing, if you don't get the approval, you cannot file on that basis. You still have, actually customs will not let you.
I got your point. I mean to use the past 12 months tax clearance documents that we have for 2017, for example, and show it to the tax authorities in order to argue with them that this is our volume of imports.
No, but like they can ask you for a letter of intent, for example. They are the regulator. Yeah, they can find out a way to apply this if they want to apply it by 1/1/2018. Okay. There's a question in the back.
Ata Shedid, manager at Rodel office. I have questions related to registration. You said that the mandatory or if our turnover reaches 3,075, we can register. So then article number 79 came with exception for the first year. If our turnover less than 1 million, we can postpone this registration. This is mandatory, or if I reach it 375, I can register?
No, if you reach the 375, you can register because you meet the voluntary threshold as well. So you can register if you want, but there's an option that if you don't register and your turnover is more than 375, less than 1 million, you will not be penalized for that. You can still register by 20 December 2018.
It is mandatory. Or option IE, if my turnover reached 400, can I register first year?
Yeah.
Option.
Because you have a voluntary registration which is at 187,500.
Okay.
So you can use that to register.
Okay, thank you.
Right? There's a question.
Assalamu alaikum. I want to ask about the e-commerce. Now the e-commerce horizon is expanding in GCC, especially in Saudi Arabia. And we have some companies which are marketing their goods here in Saudi Arabia. And some of them are located in Saudi Arabia and some of them are outside of Saudi Arabia. What about the goods which are sold here? Who is responsible to collect the VAT on these goods? Okay, and if the company are outside of Saudi Arabia and has no offices here, who will apply this VAT on them and who will collect it from them?
Okay.
That's it. Thank you.
Thank you. So we're talking about sale of goods online, right? This is the question. So mainly when you are selling goods online, if the sale is taking place in Saudi and the goods enter into Saudi, then at customs there should be VAT that would be collected, similar to customs. So that VAT will be paid by the customer. So this is how it will be applied. Now there are specific rules around e-commerce, and just to let you know, e-commerce is one of the most complex features of VAT, because even worldwide there's a lot of issues around compliance and determination of the place where the services are provided. So I'm going to assume for this case that because it's goods, services might be different, but for goods, as long as you are shipping them into the country, once they enter at customs, Gazette can instruct customs, and customs can actually collect the VAT on those goods upon entry, and then it will be collected this way. Okay? However, there are some requirements that could put at risk your non-resident company, as it will be obliged to register for VAT and declare VAT in Saudi if they meet that the requirement.
If the company is outside of Saudi Arabia. If the company is outside of Saudi Arabia, for example, like Jolly Chick, they are marketing many products here, and they have a huge market here in Saudi Arabia. But one of me, as of my work, I'm transferring weekly a big amount to them via our collection on behalf.
Okay.
So they have no official offices here and no CR here. So it is also applied on them?
Yeah. So typically Article 5, I think Article 5 of the regulation indicates that for non-residents that would have an obligation to pay tax in Saudi and they don't have existence in Saudi, they might be required to register in Saudi. For them to register in Saudi, they cannot do that being a non-resident since they don't have a presence. They would need to appoint a representative who will actually register them and deal with their tax and be representing them and filing their taxes on their behalf. In these situations, typically what we do, we have to examine the whole transaction to see what is the flow and to make an assumption or an assessment of the requirement to register. Because the requirement to register is linked to the obligation to pay tax. So if the obligation to pay tax is fulfilled either by paying the duties at customs or by, for example, by reverse charge, you don't have probably an obligation to register. But in some situation, you might have an obligation to register the non-resident in Saudi.
So the regulation maybe will come soon regarding such kind of companies? Yeah.
No, the regulation is out. It's there.
It's already
there. Yeah.
For the
what you need to do is to assess your transactions on the basis of that regulation. Okay? Depending on your specific transaction, and there are special rules relating to the place of supply of e-commerce. It's a very complex area, but it's something that you need to look at and determine whether you would have a registration obligation for the non-resident entity. Okay?
Thank you very much.
You're welcome. Okay, so we have a question from the... We'll take one more question here.
Just last question from the gen side, I believe. My question relates to the registration. Do the group registrations, group VAT registrations are open or not yet?
I think Gazette concluded the group registration testing this month in October, and I'm not quite sure if they opened it or not. If they haven't, it's very shortly that they will open it. You need to check their website to see if they opened it or not. But I know that they were testing it this month.
I recently went through and I have observed that they have not opened yet.
Okay.
So moving forward, to register as VAT group, do we need to register our individual companies with VAT also? Or we just register as a group level only?
Okay. So typically, depending on the companies, Gazette has actually implemented a smart registration. So most large taxpayers have been automatically registered. Okay? So if you're already registered, okay, that's fine. You are registered. You can just apply for a grouping. If you meet the condition of a VAT grouping, you can nominate a representative of the group, and then you can add the companies that should fall under this group. And you become one taxpayer for Gazette purposes, and you will be issued a VAT number, a certificate, group certificate that you are registered as a group with a VAT number for that group. I don't think there is a mandatory requirement that you register the company for VAT if you want to do grouping right away, provided that it is already registered for income tax. So they have your details. You can select it through the grouping process. So we have to go through the procedure that Gazette will implement or will announce shortly. And you can just select the companies that will be part of the group.
So from our companies, only 40% were automatically registered. The remaining 60% are not registered yet.
Okay, so have you made a decision on grouping or not?
Yeah, we have decided a group.
To group?
Yeah.
Okay, so what I advise you to do is mainly to check with Gazette for the other 60% of your entities, whether they have all a tax identification number with Gazette. They're all registered for zakat or income tax. And to check with Gazette, you can give them a call. There's a VAT number.
Yeah.
Just to ask them if we can just apply it or should we register for VAT first, then do the grouping. If I'm planning to do the grouping right away. Because the deadline for registration is 20 December. If the procedure for VAT grouping got delayed for some reason, I don't know. But just to avoid the risk, you might want to register those companies if they are eligible to register for VAT before December 20th.
Right.
Which is the deadline.
So I would just like to verify that you just told at the beginning of the presentation that the pharmaceutical and the surgical equipments are exempt from VAT.
No, I said zero rated.
Zero rated from VAT. Because there was a little bit confusion that the list was not out released by Gazette.
The list is not yet released.
For the products
but the regulation, it says that those items will be zero rated and they should issue a list very shortly. Okay. MOH, exactly. So the Ministry of Health would be definitely involved in this process. And once Gazette finalizes the list, they should issue it.
Okay, thanks.
Okay, you're welcome. We have a questions on the ladies' side. If
I want to ask about the online registration. Like membership registration and online schools or colleges. Is that involved or exempt?
No, like education services are taxable. So if if you have a school that meets the threshold requirement in terms of revenue, you would have to register online. Even if it's an online school or you're still providing services which are taxable.
So it's like an international services.
Sorry?
It's like an international services. It's out of VAT.
No, not really. You cannot consider it international or outside the scope of VAT if the service is provided in Saudi.
Yeah.
Okay?
Okay, thank you.
You're welcome. Okay, so I think I took like 6, 7 questions, so I'll just continue, and then if we have other questions, you will have the opportunity to raise them later on. I just want to get to the compliance requirements, and I mentioned few compliance requirements which are essential and that you need to be aware of. So first, the VAT invoice, okay? VAT invoice is a very important aspect of compliance. You need to raise a VAT invoice if you are a taxpayer, which is a registered VAT taxpayer. Starting 1/1/2018, all your invoices need to comply with the requirements. Article 53 of the regulation defines or identifies what should the invoice contain in terms of details. Typically, those details are the following. The invoice needs to have a sequential number. So there should be a sequence in your invoices. 2, it needs to have the supplier name, address, and VAT registration number. It needs to have your customer address, name, and registration number. It needs to have a detailed description of the goods and services that you are actually providing, the amounts that you are charging for those goods and the tax that would be collected for these goods. It needs to have the date as well. And I think I mentioned all of them. I hope I didn't miss any. So the date, I said the date. So the date of the invoice on the day on the, yeah, exactly. And you need also to mention, I said, if you're applying a rate which is not the standard rate, you need to put a narration explaining why. So for example, if you apply the zero rate, you need to say it's an export. Okay, so that's why I applied the zero rate. Or if I'm not applying any VAT because it's outside the scope or it's exempt, you should say so on the invoice. Typically, this invoice is important to you to issue, but it's also important to get from your suppliers, because that would be a document upon which you can claim the input tax credit we spoke about. If you don't have that tax invoice, you will not be able to claim the input tax credit that is due to you. So you need to keep it as a reference. And typically tax administration can compare, because they have a database, can compare the amount that you actually credited with the amount that the supplier charged you. So on the invoice, this will appear clearly, and they can check the records and make sure that whatever they've charged you, you've deducted. You didn't deduct more than what you have been charged. I think Gazette has released also a form of the VAT invoice, which you can check on their portal, just to see how the invoice would look like, and all the information that needs to be covered in the VAT invoice. The VAT return. Also, like this is a sample. I'm not sure if Gazette has put on the website yet the final VAT return, but they should release the forms shortly. Your compliance obligation will not start until, like if you file on a monthly basis, you will not start filing until the month of end of February. Like if you file for January, you're going to file at the end of February. So you still have time to complete that form and to get accustomed to it. But if you're changing your systems now, what you need to know is what type of information I need to reflect on my VAT return. So also the regulation indicate what the return should typically include. So typically you need to be able to report your sales and to be able to split them into taxable sale, zero rated sale, exempt sale. Similarly, anything you receive as an input tax, you should be able to declare it. Plus, you need to be able to declare the reverse charge that you are actually accounting for, and your net VAT, so how much VAT is collected, how much VAT is an output VAT, how much VAT is an input VAT, and what is your net amount. So the VAT return typically is a one-page. It's not a complex document to fill. However, your data has to flow correctly into that VAT return. And you cannot have that if you don't have a system that actually codifies that data and put it in the return. Okay, I'm going to go to the fourth section of our presentation today, which is focused more on the VAT implementation consideration. But before I go there, I forgot to mention something on the invoice, that there is a tax invoice that is required, but there's also something we call a simplified tax invoice, which is typically for any transaction which is below 1,000 riyal. So if you are a retailer, for example, you're dealing with tax invoices below 1,000 riyal, you don't have to get the name of your customer, the VAT number of your customer. It's just going to be a simplified invoice where it's sufficient to put your VAT number to charge the VAT. So it has the same requirement, but simplified requirement to allow you to issue a simpler form of an invoice.
Invoice in Arabic or English or both?
Okay. The invoice should be in both languages. There is a requirement for Arabization, which means if your invoice is in Arabic, it's fine. But if your invoice is in English, it's not fine. It has to be in English and Arabic on the same invoice. So this would require probably translation of some information that should be reported on your tax invoice. Okay? Sorry, I can't hear. Yeah. On the tax invoice or the simplified one?
On the tax invoice.
Yes.
Maybe he's not registered.
If he's not registered, you just don't include his number, the VAT number.
All right, so the VAT number whenever applicable.
Of course. If it's not there, just not applicable. He's not registered.
But if he's registered and I have the knowledge that he's registered, I must include it.
Yes.
All right.
Yes. It's part of the requirements in Article 53. I would assume so, because the zakat return is in Arabic, right?
Excuse me, for the invoice itself, we have the simplified and the normal one. For the normal one, we need to put this price before tax, then after tax for each line?
No, they don't go to that detail. You need to put the price,
yes,
then the tax amount.
Total for the all items.
Yeah. Other way to place it also, like if the price is inclusive of that,
Yes.
you can put the price inclusive and then you mention how much is the tax. You need to mention how much is the tax. This
You
is
need to
typical.
mention.
Of
You
course.
cannot just say it's inclusive all the tax. For the retailers.
If it is
and
inclusive, you just include that it is inclusive of the tax.
Yeah.
But you need to mention the tax amount. How much is the tax itself?
Always.
Always, yeah. Sorry? Discounts. Okay, we want to go there. Okay, I'll go there. So I have a question on the discounts and whether it's allowed to be on the invoice. There are so many types of discounts. Commercial discounts, which are usually like a reduction in the value or an adjustment of the value of the invoice, are allowed under the GCC framework and the regulation. So if you have like a 10% discount, you can put it on the invoice as a discount, and then the VAT will be calculated on the net amount. Now, definitely you have to be careful not to have like excessive discounts, because Gazette could challenge that. If you reach a situation where your discount is like 90% of the amount, it could be challenged, but usually if it's justified, if there's a business case behind it, it should be fine. But there are other type of discount which are rebates or volume rebates, etc. Also, those are allowed because they all enter into an adjustment of the value of VAT. However, the items that you need to be worried about is the free supply of goods and services. Whenever you go there and you start giving free items, that could be an issue from VAT perspective, because you are not allowed to give free items without paying VAT on them. You're free as a business, you have the freedom to give free items, but you don't have the freedom not to pay tax on those items. So there is a limitation on the amount of nominal supply you can have in 1 year, which is limited to 50,000 riyal. Anything that exceeds that, you cannot actually claim it. Sorry, I can't hear in the back. I'll ask if...
Do you have much time to cover?
At the end, I'll leave it till the end. I will leave it to the end and then respond to you back, okay? Samples, if they are entered into the country as sample, it's allowed under the custom regulation, because the custom law where you have this type of exemption when you enter goods which are samples, to use them here, to show them, and then they are not subject to custom. Similarly, they will not be subject to VAT. If they are free goods, it might be taxable. Okay. So VAT implementation consideration. I'm just highlighting now because we have 2 months until VAT becomes live, or it will go live. So I'm just focusing on the key areas that you need to address. Okay. I'm sure there is plenty of questions. Every industry will come with tons of questions. I cannot resolve all these questions in 2 hours, so please forgive me. But I'm just trying to show you or orient you toward what is the best method to adopt for you to get ready if you haven't done anything yet, or if you are in the midst of doing something, that would be better, and what is the best practice around this. So mainly VAT is actually a relationship between you, your suppliers, your customers, and the government. You pay taxes to the government. You will have to do VAT filing with the government. So you need to have to train your people. You need to have a tax function in your entity or someone who can actually deal with the government, because you have to file a monthly tax return. So that's a monthly interaction with the government. So you need to make sure that you have the administration, the processes, the procedure to be able to reflect that. You need to train your people. You need to have the systems ready for you to be able to do that. In the same time, you will be dealing with your suppliers through purchases and with your customers through your sales. So therefore, you would need to make sure that your supplier are, if they're charging you the VAT, they are registered, you have their VAT numbers. The product list of your supplier is actually reflected in your system, because some products could be zero rated, like medicine, medical equipment. So if you are buying those items, you need to know that those should be zero rated. Similarly, for your sales, you want to make sure that anything you're charging to your customer, if it's subject to VAT, I'm charging the right amount of VAT. I'm zero rating my exports. There are more complex areas that I'm not going to talk about today, but it falls within the same thing. So you need to do all this work to manage your relationship with your customer, supplier, and government. So I'm just going to give you, as a holistic view, what would be the impact of VAT on your business, so you have a better understanding on what areas you need to address. So mainly, VAT will have a business impact because it could affect your pricing. It also could affect your margins. Because if you're selling a product at a certain price today, once VAT gets implemented, you will sell it at 5% more. So we all know the dynamics of the economy and the rules of supply and demand. When prices increase, demand decrease. So for you as CFOs, you need to start thinking about, okay, what would be my demand like for the next year when VAT gets implemented? What would be my volume of sale? And what is my profitability target? Because if the volume decreases, your profitability could also decrease. So you could go into an analysis of your pricing and decide on your margins. Like, should I bear some of the costs and keep my prices low so I don't impact my demand? So that's a question that you need to answer as businesses. Also, VAT would have a cash flow impact. So someone asked me about the customs, and I pay VAT at customs. Definitely, like VAT will have a cash flow impact. You pay VAT, you wait 1 month, then you declare VAT. If you are in a refund position, Gazette could take 60 days until they pay you the refund back, because they have the right to do so. So therefore, there could be a cash flow impact if you have a huge refund that you are claiming. Let's assume you are an exporter. All what you do is you export. So you buy items locally, you export them. If you are in this situation, you will always be in a refund position. So VAT will have a huge impact on your cash flow, because you need to buy items, but you will pay VAT on that. You will export, you have to claim your input back, but then you have to wait a certain period of time, where like you need to finance these purchases, you need to finance this 5% that you which is actually blocked because of VAT. So cash flow is one of the main considerations that you need to have. Also, if you are a big group, you might want to consider all the intercompany transactions, because someone asked me about VAT grouping, and one of the benefits of VAT grouping is that it eliminates intercompany transaction. So if you have two entities that are providing supply to them to each other, and those entities are part of the same group, then they would not charge the VAT between themselves, because they are part of one group. They are one person now. If you don't group, then you will have to charge VAT from one entity to another. And this is probably a practice that you don't apply now, because there was no VAT. You simply do an allocation for accounting purpose. But now, things have changed. You cannot just do an allocation. You have to charge VAT if there is a service rendered between the companies. Think about all the shared services arrangement that you have and other type of transactions that could happen between the companies, and you need to start considering whether you group or you don't group. And you don't have a lot of time to make these considerations. Sorry. Also, you need to think about the governance framework around VAT. So VAT will be a tax that you will have to file on a monthly basis. And therefore, you need to think, what is my strategy about tax? And how should I file my return? What are the policies? What are the procedures that I should implement within my organization to be ready for that and to make sure that I have the right level of internal controls that will decrease my risk of getting penalized for VAT purposes or to make mistakes in my tax returns, because the penalties are very high. They're very high penalties. Most importantly as well, we have the VAT coding in the systems. So VAT will impact your systems, right? So you need to make sure that the VAT codes in the system, depending on the system that you use, are all changed in order to reflect VAT. So if something is taxable at 5%, it needs to be codified as such. And if something is zero rated, it needs to be codified as such. And it's not quite a simple exercise, because you have many rules around VAT, you have many exceptions that you need to take care of when you are doing this code codification, because one item or one product could be zero rated or taxable. It could fall under two arrangements. So it depends really on what is the transaction that is taking place. A product, if it's exported, it's zero rated. If it's sold domestically, it's 5%. So if you don't recognize the transaction in your systems, how would you know? The code by itself is not enough, because you will not go and manually change the codes. You have to build matrix in your systems. You need to adjust your systems to be able to reflect VAT correctly. Sales and marketing. We talked about discounts and promotions and free goods. You need to start thinking differently now when VAT is implemented. If I'm giving a free good, I might risk to pay tax on it. So my cost will increase, because if it's free, how can I charge my customer in the first place? I cannot charge VAT to my customer if I'm already giving them a free item, right? So therefore, I need to consider my pricing arrangements, my promotion arrangement, my marketing strategy to see how I can actually develop some sort of policies around that would optimize my VAT's position. Contracts with suppliers and like for procurement purposes, supplier or customers. There are some transitional provision as well in the VAT regulation. For example, for contracts that are signed before May 30th, 2017, and that did not anticipate any VAT, you can end up zero rating the supply after 1/1/2018 if certain conditions apply. One of the conditions is that your customer, for example, should be able to claim in full the VAT that is due on that transaction. So let's suppose you have a rental agreement of a commercial property which is taxable. Then if you have this situation, your customer might ask you, like, if I pay VAT on the rent, it will impact my cash flow. Can you just zero rate the supply, because I can claim it in full? And our contract is signed before May 30th, 2017. So is that a possibility? If you agree with your customer to do that, he has to provide a certification that he can deduct in full the VAT. So you can zero rate that supply after 1/1/2018. Otherwise, you will just charge VAT. So reviewing those type of contract where this transitional provision could apply is something that you can start doing in order to determine what to do on 1/1/2018 or afterwards. Now, all of that is mainly to address some key risks that exist. The first risk is the regulation risk. Like, we know that the legal framework in Saudi is there, but there are still some missing items. For example, the list of medicine and medical equipment that will be zero rated. If someone is working in that sector, like, you need to know which items are zero rated and which one are not. Okay, so you need to get more clarity on the regulation. You can do that, like Gazette is doing a lot, but also they are also under pressure to finish. So mainly there is, everyone is pressured to have VAT completed, but they are supposed to issue this regulation very shortly. What you can start doing is mainly just identify which are goods that will be most likely zero rated, to make sure that you can change it soon when the final list will go out. There are other areas where also Gazette will issue some additional guidance on, for example, the sectoral guidance. Those are also important element of the regulation that will make it more certain. So, but however, for now, among all the GCC member states, Saudi is the only country that has actually issued the regulation. The UAE has not yet issued the regulation, for example. So let's look at the positive side and think about what we can do, rather than looking at the negative side and say we can do nothing, we don't have this. No, there is a lot that we can do now, and this is important for you to start doing that, because if you don't do it, the impact on 1/1/2018, if you are not compliant, will be huge on the organization. Documentation. I need to do it now to reduce any risk related to documentation. Because, as I said before, if I don't have the VAT invoice from my supplier, I cannot claim an input tax credit. So it's very important that I have a process in place to document everything. And in the VAT regulation, there is also a documentation period requirement. So you need also to maintain those documents for a certain period of time. So you need to be aware of this regulation, and you need to apply them in your organizations. Controls. You will be filing tax return on a monthly basis. Mistakes could happen. Okay? You need to have some sort of controls to manage this internally into your organization, because without adequate controls and governance, you might report VAT incorrectly, and reporting VAT incorrectly means a huge penalty. Okay? So you need to be aware of that and establish those controls. You can rectify, but you will pay penalty. They allow only 5,000 Saudi Riyal adjustment without any penalty, I think. But if you file an incorrect tax return, you could get penalized. Also, financial statements. Sometimes you might make some adjustments on your VAT return for certain reasons, and which will make your financial statements or the VAT liability, because ultimately you're reporting VAT liability and VAT assets in your financial statement. You might also report VAT cost expenses or VAT revenues, I don't know. But in all these scenarios, if the VAT amount in your financial statement is different than the VAT amount in your tax return, there could be an issue. So you need to make sure that the VAT in the financial statements actually represent the actual liability and that they tie with your VAT return. So if they don't tie for some reason, you need to be able to justify why. Because if Gazette asks for the financial statement and they found discrepancies, they will definitely ask you why we have this discrepancy, and you need to be able to answer why. It could happen in some cases. As long as it's justified, it should be fine. Okay? So here we continue with the documentation requirements. So here I'm just highlighting the key risks and things, or example of things that you might need to be aware of. So you need to make sure that you don't apply any incorrect rates on your claims or documentation. Like on your invoice, 5% is 5%, 0% is 0%. Any wrong rate applied will mean you have an incorrect VAT. Delays with VAT payment invoice. Try to avoid any delays in paying your VAT, because penalties will start applying if you have delays in payment. If you have invalid or missing documentation, you have a risk of not being able to support certain VAT treatment, and that could end up badly. Invalid or insufficient documentation as well. Invalid VAT claims, so claiming VAT in relation to exempt supplies, for example. you shouldn't do that. You should apply the apportionment method. So if I have an exempt supply, I should make sure that I calculated my apportionment correctly and I'm not claiming more than I should. Because if I do, penalties. Okay? Claiming foreign tax on returns as well, this is something that could apply. Calculation and adjustments. So mostly you could have errors in calculation on your returns, which you need to avoid. You could have clerical manual systems and errors in the systems. This is why you need to establish controls around your system to avoid these scenarios. You need to make sure that you are not omitting intercompany transactions. Sometimes you just provide services between companies and you just don't charge anything. When VAT comes in, a tax inspector can deem a supply to be provided, especially if you have shared services. Because, for example, I'm providing an accounting service to an affiliate or a related party. I'm not booking anything, I'm just sharing the cost. Once you have that, you might want to issue an invoice if you didn't group, because that's a VATable service. It's a deemed service for VAT purposes. You are providing accounting services to a related party. Journal adjustments also, like you might at the end of the period make some adjustment to fix your accounting and reverse a revenue account, reverse an expense account. You should remember that once I do a journal entry, there is VAT implications. Because when I initially recorded this transaction, there was VAT there. So if I do journal entries without taking VAT in consideration, I might end up over-reporting or under-reporting my VAT, and I could get in trouble because of that. Manual corrections that you put in the systems. You have to be very careful. Who's doing that? Are they authorized to do so? Is there like the required level of control? For example, changing a code in the system. It could lead to significant VAT consequences. Transactions outside the system as well. You might have some invoicing. For example, some taxpayers I work with, they have an invoicing which is all outside the system. So they don't invoice from the system. So you need to make sure that any transaction that is taking place outside the system is actually mapped to the system, and I'm sure that they all match. Okay, because any discrepancy will get noticed. Okay? So how to avoid those pitfalls that I've just mentioned? You need to build validation check in your AP and AR system. You need to make the documentation in a way that is easy to capture, referenced, archived properly, and stored properly, because they might come 4 years from now, ask you about a transaction you conducted 4 years back. If it's not referenced properly, you will not be able to retrieve it. Training, behavior, and culture of compliance. Like you're doing a training now, but I encourage you to do more training, because there's a lot of details that we didn't mention, but you should do as much training as possible, and to change the behavior and the culture, because VAT has not existed in Saudi before. It's not a mature tax economy, okay? But however, there's a lot of people in this economy coming from different regions where VAT is implemented. So some people have knowledge of that and how it would apply. And this is how you can build it in your organization. Like you can utilize on the knowledge that some people in your organization have, and try to also to expand on that. Controls, which are combined with sufficient tax knowledge. Like whoever is doing the internal controls have to know tax as well, because how can he check if this transaction is right or wrong if he doesn't have the tax knowledge? So those areas are mainly very important for you to avoid common pitfalls, especially that you only have 2 months for implementation. I'm just going to skip this slide, go to this. So typically, if you haven't started with a VAT implementation project, you need to start thinking about what shall I do. First, there is something that everyone should do, is to do an impact assessment. Now, we know we have 2 months left, but you have to do an impact assessment to map all your transaction, because VAT is a transaction-based tax. I've been asked something about online or e-commerce. I'm sure there are thousands of transactions which are questionable, and what would be the VAT treatment of these transactions? Even a tax expert would have to look at it and think about how that transaction is structured and what would be the VAT application under the current regulation. So it's not a simple exercise, and it's a must do. If you don't do that, you might miss a lot of transactions and you will not be applying VAT correctly. So it's very important to map your transaction correctly and determine what would be the VAT treatment. Once this is done, you can move to the design phase where you design the solution in your system and you implement it in the implementation phase. And after that, 1/1/2018, you start operating VAT normally, and your exercise will be mainly compliance because you need to file your tax return. So in every aspect or in every phase of these phases, you need to think about how I'm going to manage the project internally. You need people who have the VAT technical knowledge on the ground. You need people who have the business process knowledge who are working on this. You need people who understand technology and who understand the systems and how it needs to be changed. And you need people who can actually train your people, and you need also to think about the structure in the organization. So typically, those are the phases that you have to go through. At this stage, you only have 2 months left, so probably you want to shrink them as much as possible and decide on what can be done now and what can we do later on. But mainly, what you need to do now is you need to make sure that VAT is charged on your transactions correctly, starting 1/1/2018, which is a lot already. But this is a must, and you need to make sure that you are compliant. The VAT invoice is one of the most important features. And then you can think about building governance framework maybe in January, or developing other features that are as important, but due to the timeline, probably you cannot do it now, but to think about it and how you can apply it later on. So if I work backwards just to analyze what are the steps and what we need to do until we get ready by 1/1/2018, so you need to have high-level business analysis. You need to review your contracts. You need to have a project structure or shape your projects. Who will be doing what and when? Then you have to have a detailed impact assessment of the business, because we said in the previous slide that there is a lot of consideration for pricing, for margin, for revision of contracts, etc. All of that has to be done as soon as possible. Then you have to design the changes in the system. You need to get an approval on the design, because this takes a lot of time as well, and to start implementing the changes and testing it. Then, if you haven't registered, you need to register. You need to do the staff training. You need to communicate with your customers, and you will be ready to go live. So mainly on each of the essential areas, like project management, VAT technical, business process, technology and learning development, you need to have a project or activities assigned to that. And the objective is to understand your current situation and see what can be done for me to be compliant with VAT. And with this, I come to a conclusion of my presentation. As promised, I will leave room for questions. I'm sure you would have a lot. So thank you a lot for your attention.
Yes. Thank you very much, Mr. Shadi Bushagara, and thank you for being like a great audience, mashallah, full attention. And I'm sure due to like kind of composing things together is kind of challenge to continue listening, but alhamdulillah, I see the interactive and I see the people are raising their hands, but we could not make it in the middle as we did some pieces. Just like before, I see people start moving, so I just like make one announcement. I have good news for finance community in Riyadh. We are IMA, of course. We are like Institute Management Accountant serving IMA members. But since day one, when I accepted the role with my team, who are really doing a great job, we take the promise to serve the finance community, ladies and gentlemen, all. So So we are here to help the finance community, accountant and finance, as well as business. You can now accounting. You cannot say accountant. Talk about business. Accounting, the systems are doing it for us. So we are doing business. So we are part of the business. Business will not move without us. So we are here, IMA chapter, to help the finance committee and all. So the good news, or the surprise, if you call it, for those who have not been an IMA member, there's a 50% discount, 50, half the price, to be a new member. This expires in a few days. So all you need to do, just go IMA. We, for our people listed in our portal, we'll send, we have like about 1,300 people registered. We'll send them the announcement, which we received a few days ago. I think it expires in November, either 7th or 9th. So please take action as fast as you can, as well as for the CMA exam. So because IMA is the only provider who do approve the CMA. So if you are interested to consider CMA exam for 2018, apply for it now, take the 50% advantage, and that will encourage you. Since you have paid, you will start preparing. And it is two-part exam. And I think compared to CFA or CPA, it depends where your area. I don't recommend you take many certifications, no. Just focus on only one. So if you CMA is yours, CMA apply in all business except accounting firms or some other areas or financial institutes. So please consider this offer. If you have any question about it, will be said after the session. So this is the announcement. 1 second. Yes. No entrance fees? Okay, no entrance fees for the exam. So more information in the portal. So IMA portal will be there, and we are around to answer all questions. Now we have 10 minutes to answer, like, let's say, questions. Ask the question only, but please mention your name. If you like to mention your company to get better, but ask general question. Don't ask specific for your only business. So because people would like to listen to general and valuable information to everyone. I'll start with the lady side, if you don't mind. You have any question? Here? Ready, or after a while? When you are ready, raise your hand, please. Okay. People in the back. You have the mic? People in the back? We give the preference in the back. We have not answered.
Sir, in the meantime, I have a question regarding real estate. You mentioned that...
regarding?
Real estate. If someone has personal real estate and his tenants are from the commercial side, what is the impact?
Okay, so...
Second question, regarding the supplier, if supplier give us bonus, for example, it's not my business, but I'm asking about that credit loan. What will happen? Because first he gives us the invoice, he charges the vendor.
Okay. Okay, let me answer those two questions. Yeah, I will repeat the question. So the first question, if I'm an individual renting real estate residential units, right? Residential or commercial?
Residential and commercial both.
Okay. So if I'm an individual, exercising this activity as regularly and as an economic activity, I become eligible to register for VAT. Okay? Typically, if I'm only renting out residential units, this is an exempt supply. So I might not be eligible to register because I don't meet the taxable turnover requirement. But if I'm renting out commercial real estate, I meet the threshold, even if I'm an individual. If I do that regularly, I will be eligible for registration, and it's a normal registration process. The other question, if you receive a bonus from your supplier as a discount. So your supplier should issue a credit note to you. The credit note has the same features of the invoice, and it should make reference to the sequential number of the invoice that you've received initially. Once you get that, you can adjust the value. Okay? Yes.
Please, what about unregistered suppliers? And if we deal with unregistered suppliers, we have to stop to deal with them, or what?
Like, you don't have to stop dealing with them. I wouldn't think about it this way. Mainly, if they don't register, it's their problem. But you should encourage them to register, because if they don't register, they will just increase the price that they charge you, because they will be paying VAT that they cannot recover. So they should register, charge you VAT, you can deduct that. If we're talking about your supplier. No, I'm just going to give other people the opportunity. Sorry for that.
Excuse me?
Yeah, you asked the question, right? You were in the back. Yeah.
I have two questions. One is we have a different type of business. My name is Nandu. I have a company because we are a group. We have a retail and we have at the same time real estate also. So is it possible for group filing?
Like, the sector is not a condition for group filing.
Okay.
There are other conditions that needs to apply to be eligible for grouping.
Okay.
One of them is the common control. So you need to have common control of these companies so you can group them. Common control means that you own 50% or more of the shares or the value of these entities or the voting rights.
Okay.
So if this condition is applied, plus both of them are in Saudi, then you can group.
Okay.
One of them should be a taxable person as well.
Yes. And another question is, if you already rendered the services,
yeah.
Because we are retail, we already invoiced and we rendered the services. So when they're paying in January after 2018, is it taxable, the payment?
If the service has been rendered now and paid after, no, because the supply has been done now.
Yes.
But if the service is completed in 2018 and invoiced now, VAT becomes due.
Okay. If it is applicable for the real estate, because real estate,
of course,
always we will
yes.
raise the invoice 6 months before or 1 year before.
Yes.
So the portion of 2018 will be taxable.
Yeah, but the service is completed in 2018,
yes.
So it's going to be taxable. Correct.
Okay, thank you.
Excuse me, I have two questions quickly, very quickly. Regarding to deduction, we will deduct all taxes we paid during the month, or just for related or for our business. Like we pay taxes for stationery during the month, so we pay many taxes during the, deduct everything.
You deduct everything that is incurred in that tax period.
Okay. Second question, for the VAT, for cash basis, or actually, you know, now there's credit invoices, a long time to collect.
There is some rules around cash accounting. Like if you are following cash accounting, you need to apply for cash accounting approval from Gazette if you want to adopt the cash method.
Excuse me, I ask about bad debits. For example, if I make one invoice 100, okay, and my customer pay, for example, 10,000. What about the rest of this amount? Maybe bad debits.
So you ask about bad
debits.
So
thank you.
Also, bad debts are allowed to be written off. If you follow the normal procedure, you try to collect the debt and you don't get it paid. Yeah, if you have to pay VAT first. You pay VAT on the whole amount. If your customer doesn't pay, you can reverse the VAT if you can prove that your customer did not pay you after a certain time.
Can I ask everyone to sit down? Who would like to ask a question? We'll have another 5-10 minutes as long as you are interested to continue. We are fine to stay as long as Mr. Shadi as well. So if you like to ask a question, please sit down first. We need to be like in a good sitting, like comfortable for everyone. So I would really appreciate if everyone sit down, and then if you don't mind, we'll give the priority to people that sit in the back, and they will come in the front. As well, we will stay as long as you have questions, we'll have answers. I already agreed with Mr. Shadi this afternoon. We will stay as long as you need, especially for specific questions. If you have specific questions, please don't ask. Please don't raise your hand. If you have general questions, everyone will benefit. This is what we are looking for. So I go to the, I'll just, if you don't mind, I'll just select people from the back seat, young generation, if you don't mind, young generation. What do you have? Quickly, a question, right here.
Hello, my name is Ahmed Al-Aisi. My question is, how can we apply the VAT on the long-term investment or long-term contracting on the organization? Thank you.
Like if you have a long-term contract with the government, for example, or like development. Okay, so you apply the VAT normally. Everything you purchase now, you just pay VAT on it. And you are going to charge for completion of service, right? Whenever you raise an invoice, you charge VAT.
After we added the VAT, the price will change. You know, the price we
any adjustment to the price, you can actually issue a credit or a debit note to adjust the price that you actually recorded on your invoice. So if there is an adjustment to the price, you just issue a debit note or a credit note.
Thank you.
We will charge the government.
Sorry, Mike, please.
If I have a project with the government, I'll be able to charge the government for the VAT?
Yes. Governments are not exempt from VAT. So if you are selling services or goods to government entities, you will charge VAT normally. Government entities who are eligible entities would be able to refund that VAT that they pay through a special process that Gazette will implement.
Okay, thank you.
Okay, here. Question. Oh, there is a question there. Yeah.
Assalamu alaikum. Muhammad Abdul Badiah, STC company. I ask you if I export goods from foreign country, okay, and I pay for them 5%, like example, okay. How come I make a balance between I pay and I put in my report, and because this this VAT, Saudi Arabia government not take it in independence, because I didn't pay it for Saudi Arabia. How come I make a balance between what I pay for the foreign country and what I have to make a balance in it? Got it? Okay. Sorry.
So like anything you export will be zero rated. There are some rules. Like, are you talking about VAT that you pay in a foreign jurisdiction?
Yes.
Okay. Yes. So yeah, if you pay VAT in a foreign jurisdiction, typically the VAT rules are developed in a way that you will not end up paying VAT in two places. In some limited situations, you could end up paying VAT in two places. In the income tax, from income tax perspective, there are treaties that actually resolve this matter. For VAT, there is no treaties. Then it becomes a case-by-case scenario. Like I don't have an immediate answer. I need to look especially exactly what are we talking about? What are the services being provided? Why the VAT is paid in the foreign country? And whether you will be eligible to pay VAT here in Saudi. If you're paying VAT in the foreign country and the supply relates to the foreign country, then you don't need to pay in Saudi. But if they charge you, then it's a different question. We need to look at that specific case, why you're being charged in two countries for the same supply. We have such situations, for example, for services received from Turkey, where they charge VAT and you get charged VAT. But it's not common. It's not very common, okay?
Assalamu alaikum, Abdullah Al-Ajaji. If a company is 100% owned by a non-profit organization, does VAT still apply? Is there a special regulations underneath? Or?
Yeah, like Gazette has not yet issued any guidance on the non-for-profit organization, but mainly we know that the intention is to treat them preferentially. Like non-profit organization will not be considered to be exercising economic activity, as I understand. But there is no guidance as so far on how this will be treated. Now, if we're talking about an entity owned by a non-for-profit organization, but it's an entity that actually exercises economic activity, also the objective is not to create an unfair competition in the market. Right? So if that entity, for example, owns a school, and the school is taxable, from like other schools are taxable, probably they will make it taxable as well. Until we get further guidance, I cannot confirm 100%, but this is how I see it. Unless the school is operated itself by the non-for-profit organization, and it's not like only owned by it, then it could be a different scenario. This needs to be confirmed with Gazette. So you need to apply for a ruling, or we wait until they issue additional guidance on this.
Hello?
Do you have a couple of questions?
Yeah?
Hi. Yes.
Do we have questions?
This is Maha from She Works. I own an incubator that has incubates a lot of startups and freelancers. The majority are women. I have two questions. First of all, you mentioned that whoever is going to register should have a really good accounting system or an invoice system that clarifies the kind of VAT. Do you recommend any kind of system like a cloud-based? Because as SMEs, we cannot afford the accounting system that are too expensive, and you need a certain accountant. So usually we deal with freelancers, and we upload our own, accounting system that are usually cloud-based. But I never noticed the VAT. I just saw like one single cell that talks about VAT.
Yeah, like there is a lot of accounting software that has actually VAT embedded in them. What you need to make sure that I cannot recommend any for now, but mainly what you need to make sure of is that any accounting software that you buy have to include the VAT features in it, specific to the GCC. Because if you buy something that is specific for Europe, it might not work completely correctly. Okay?
The second question, because we deal with freelancers, the Ministry of Labor said that freelancers are executed, they don't have to pay VAT, okay? That's what they told us a month ago. But the thing is, we deal with them as a company. I hire them, and I ask them to do some services.
So, I will not comment on what you received from the Ministry of Labor, but mainly, if someone is exercising an economic activity, they're invoicing you?
Yes.
So it is an economic activity. If you're paying them more than 375,000?
I don't think so, no, but
so if they don't meet the threshold, they don't need to register, even if they are exercising an economic activity. But typically, this is what you look at.
But what about me? How am I going to get the VAT from them? Like, you need the code, like you mentioned.
If they are registered, they need to charge you VAT. If they are not registered, they will not charge you VAT.
Okay.
Okay?
Thank you.
Any questions from the... Sorry, we have another question.
Hi.
Hello.
My name is Dima. Okay. Excuse me, if I have a contract which is already started in 2017 to be continued until, for example, July 2018.
Until after 1/1/2018.
Yeah. Do I have to pay the tax in the beginning of 2018?
Like, it depends on the contract. I don't know what the contract says, but mainly, if you are providing services under that contract or goods.
No, it's like a rent contract.
A what?
Rent contract.
Rent contract?
Yes, space rent.
Real estate trust?
Yeah.
Okay. Yeah. Okay, so so if the lease is taking place after, yes, you have to pay VAT on that lease. If it's not, residential, because residential is exempt. Commercial is taxable.
What about if it's residential?
Sorry?
What about if it's residential?
No, but can you use the mic? I cannot.
What about if it's residential? So do I have to pay it?
Residential, you don't have to pay VAT. This is what I'm saying. It's an exempt supply. So if you're renting someone a unit which is for residential purpose, there is no VAT because the supply itself is exempt. Okay?
Okay, thank you.
Thank you. Any other question? Ladies' side. We'll come back. Just 1 second.
I want to ask you for unbilled.
For?
Unbilled. It's finished already after in 2017, but it's unbilled, yani. In 2018, unbilled, and still. But we finish all of service and...
If you finished everything before 2018...
But it's unbilled, yani.
Unbilled?
Yeah.
Okay, you want to make sure that you bill it before January 1st. If all the services has been completed, you need to bill it.
But for something, we didn't prepare our invoice.
Yeah, but you need to bill it before year end, because if you bill it after, it becomes taxable.
It should be.
Yeah. Okay.
Either if I finish all of and deliver all of items.
You said you delivered everything,
Yeah.
right? If you delivered everything, you should bill it. Bill it now. Why should you wait until 1/1/2018 and get into a risk of considering this a taxable supply for you?
Okay.
Okay.
Yeah, okay. طيب for a long contract, if we finish يعني some of services before 2018, and in 2018 there is some amount we finish it يعني. We pay for this amount after 2018 or for whole amount?
Okay, if you are carrying on services and those services will overlap with the implementation period, like you will continue to provide those services after 2018,
Yeah.
on that portion you have to pay VAT.
For whole amount or for?
For that portion you have
That
to pay VAT, correct. Because the service will be completed next year.
If it's for goods?
Goods is when the goods are delivered. If you deliver the goods before 2018, there is no VAT. If you delivered the goods after 2018 and you issue the invoice in 2017, you pay tax in 2018 on
For
that.
whole amount?
On the delivered goods. Yes.
For whole amount?
Yes.
Thank you.
Okay.
If you don't mind, we'll have two more questions. We don't want to keep you the whole night, so we need that for as well as for Shadi. So we'll have two more questions for those who have not asked. Please give the opportunity to others.
Okay.
I would like to the last one in the back seat. No, the last person there.
Yeah, let's.
Yes, please.
Sorry, Hassan. Yeah, we'll take the last person, and there is a question here.
Okay,
So.
I'm fine with you. You manage it. I'm fine.
Thank you.
We need two questions, and then we
Yeah.
will stay around for those who would like to stay, because we still need to recognize the instructor here, Mr. Shadi. So we do want to keep him ready.
I have a question on reverse charge mechanism.
Yeah.
In which commodities and services will be applied?
Sorry, which?
Reverse charge at which goods and services will be applied? Does it?
It will be applied to all services received from abroad. Okay?
Received from abroad?
From foreign services.
Foreign. In GCC or outside or all outside?
I don't want to go through the GCC, it's very complex. There is transitional provision around GCC. For now, what you need to know is that any foreign service received, you need to reverse charge.
To reverse charge?
Yeah.
To like I make a sales and purchase, deduct the
Input
purchase.
and output.
Input and output.
Exactly.
Okay. Thank you.
You're welcome. Question on the back, please. So this is the last question, right?
Very last, because we need to give the opportunity to people in the back.
Yeah.
As much as you can.
Definitely, yeah.
Appreciate that.
I have two questions. One question is that Arabic, this invoice, each and everything in the invoice like numbers, figures, customer name, address, terms and condition should be in Arabic, or only the like title heading. If I translate Ismail Amil, customer, so no need to translate the name of the customer, his address. Similarly, like numbers, amount, date. So this is my first question.
So to answer your first question, which is supposed to be the last, but I will take your next. Everything should be in Arabic. Now the numbers, like there is I think there is something around the numbers which is unclear for most people, but mainly the numbers, if it's written in English or Arabic, I think it's the same. It can be read, so there is no problem for that. But for all other things, they have to be in two languages.
Okay, that's master data.
Your next question?
Yeah, my next question is that, people in the traveling like trips within the country, a lot of service provider like hotel, taxi, restaurants, they might not give the bill, okay? VAT compliant bill. So that means company will not claim this as a tax from the authorities, okay? So this would be a cost, or company can go other way around, like they can give some cash to their employees, okay, trip allowance, some justification, and to avoid these, sort of complexities, input and output.
Yeah, like most hotels and most restaurants will be subject to VAT anyway, and they should raise a tax invoice.
Yeah, but I'm talking about the restaurants, taxi fares, local transportation.
Like we said that for small invoices below 1,000 riyal, it can be a simplified tax invoice. So a taxi will not be 1,000 riyal, right? A hotel room, if you stay for 5-6 days, it might be, but the hotels should be able to issue a tax invoice in the name of the company, so the company can claim that amount back. That's the right treatment. Giving cash to employees, how would you expense that?
You're right, but in the Saudi Arabia especially, a lot of Shugam Afrusha furnished apartments in the remote areas they are working, and people are staying for the month, and I believe they will not comply with all these sort of regulations. So, I mean, how you'll manage? It will increase the cost because you cannot take.
No, I understand the question. I fully understand what you mean, but I haven't explored that solution. Like if you pay cash to your employees, you expense it, what do you put it as expense?
Because cash allowance is not subject to tax.
Yeah. Yeah, but how would you, like you will not report the VAT and you will just... But you're bearing the cost anyway. But you're bearing the cost anyway.
Is it repeating as expenses, so it will
I
not
understand.
be exempted.
But what I say, if you give your employee 10,000 riyal and he goes pays the hotel bill, how can you deduct VAT? You paid your employees 10,000 riyal. So you will not end up recovering any VAT with this method. What I'm telling you, you should ask for the invoice to be provided.
With that, we like to, is it okay, Shadi?
Yeah, sure.
Is it okay, everyone? Because we have to go and do it.
So, I know there's a lot of questions.
Again, thank you. I'd like to put your hands together for Mr. Shadi Abu Shagra, and thank you so much for everyone.
Thank you so much.